Alright, so this video is going to be about golden crosses and death crosses to understand when we're in a bull market and when we're in a bear market. This will be one of the most important videos you'll see in quite a while. So what I have here, I'm on the BLX chart, so this gives the most data for Bitcoin. This shows the whole history of Bitcoin. I've got it on a daily chart for right now. And we're going to go back in history, back in 2011 and 10. So I've got the exponential moving averages here. I've got the, let's actually change this. So you want to put the 50 on here, 50 day, 100 day, and then 200 day. Okay, so the 200 day is this green line here, and then the 100 day is the yellow one, and then the 50 day is the red one. So if you notice how they're all pointing up here, that means that we're in good shape until they start to curve down. So that just indicates a little bit of trouble. A little bit of trouble here. Doesn't indicate a bear market yet, but it does show that we're in consolidation for a little while. So we were in a bull market all the way from 6 cents all the way up to 32 cents. So once we start crossing, this red one starts crossing over the yellow one, that indicates a little bit more trouble. And then this is a death cross right here. So whenever the 50 day crosses over the 200 day. So when that happens, Bitcoin price drops significantly. So 71% from that point. So if you had bought down here and then you just sold whenever you saw this cross, you would have been up 10,000%. And then once we start curving back up here and then we start crossing this first yellow line, that's a good sign. It doesn't mean that we're out of the bear market yet, but it's a good sign. And once we cross over the yellow and the green with the red, then we're in good shape. Then we're back on for a bull market. So if you just bought crypto whenever it crosses over if you would have bought it back in 2012 when it crossed and just held on until it crossed, well, so this isn't an official bear market because it never crossed that green line. So once it crossed here, 10,000%. So that's pretty cool. That's a good way to make you some money. Once it gets really close, if it consolidates there, it'll normally bust up. This one here was pretty scary for people, but we didn't have a death cross right here. We stayed in a golden cross. We didn't have a death cross until this right here. So sometimes it'll fake you out, but after a huge move like this, it's normally, hey, we're in some trouble. It's probably time to get out of the market after a pump, after it goes up a little bit. Because if you would have got out, if you would have tried to get back in this cross here, and you rode it out to the bottom, that's 74%. So just after a big rally, just be careful. So we stayed down here for quite a while. We had a fake out right here. It didn't cross. So people that were not very patient got in when they thought it was going to cross, and it dropped here 28%, and then it rallied. We had a golden cross again here. So if you would have held on from that golden cross and it stayed in a bull market, so that's the sign for a bull market. If you would have stayed in there from this cross all the way to the death cross down here, 3,000%. So that's a good sign that we're going up from there. And then once we had that death cross here, price was down here, or let's say up here. So you got in, if you would have got in on the fake out, it was a 70% decline. So right here it had a golden cross too, and a lot of people would have thought this was a fake out, but it rallied from that point, a couple 100%, I believe. Yeah, almost 200%. And then it came back down, had a death cross, and then faked everybody out. Now we're in a golden cross right now. So depending on where this goes, people would have re-entered here, they would have entered here and just hung on, or re-entered here, and then just they're up right now. So however high this goes, very few people can tell. But you can also do this on a longer time frame. So let's go to a 3-day. Okay, so you've got 3 days. So it's, instead of the 50-day moving average, it's 150-day. And then for the 200-day, it's 600-day. So each one of these candles down here, each one of these little candles are 3 days instead of 1 day. So we've got, there's not much data here, so it won't show the cross too well, but it looks like we had a cross here, and we maintained this cross all the way up to this point right here. So that was a bad sign to have a death cross on a 3-day, so we had this huge spike down. We had it here, so that's a really, really good sign that we're going up for a while. And then we had this death cross here, and it dropped. Bullish sign here, and then we maintain that bullish sign there. That's really all. You can look at the weekly as well to kind of get a bigger picture understanding. So we had a cross here, it's just consolidating, and then it crossed back up and stayed in a bull run here. This part didn't cross down. We just stayed up here. So you can look at all 3 indicators, 3 different time frames to kind of understand the big picture of everything. I wouldn't go past the 1 week. The data's not very good, but I'd stick to the 1 day and the 3-day. So that's how you can maximize your profits. Just understanding a bear market and a bull market. When we do have that, 50-day cross under the 200-day, it's a long consolidation period and downturn. So just be prepared for that. So like this one here, cross right here, we didn't bottom until 500 days later. Or you can go to this bottom if you wanted to be waiting 276. And then this one here was crossed here, didn't bottom for 250 days. So as long as you understand that, you'll be in good shape when it comes to long-term trading, so investment trading, for good buy opportunities and good sell opportunities. There are ways to kind of sell at tops before these bear markets, and I'll teach you guys that as well. But that's one indicator that's a lot of people, when we have a bullish cross, a lot of people will think that we're still going lower, but TA shows that no, we're going higher from here. All right, so I think that covers that here. If you want to find the EMA, just go to indicators and type in 3 EMA, and then you can type in 50, 100, and 200 day.